Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks, but let's bring in our next guest for our cash tag segment. It's going to be Andy Swan, the co-founder of LikeFolio. Welcome back to the show, Andy.
Hey, thank you. Happy New Year.
Yeah, Happy New Year to you too. So we're talking Roku's stock dumped over 80% last year, but they just announced some new TVs that are going to be their own brand, and they came out today and said that they added that their active accounts exceeded 70 million this past quarter. That's about a 16% jump from the same level in 2021. Are you guys seeing data supporting the growth that we're seeing here?
Yeah, I think people love the Roku platform. They even like some of the ad technology that Roku brings to the table. What investors don't like, and I have to say I'm with them, is all of this distraction that Roku seems to have brought on itself. At first it was creating original content, trying to be the next Netflix or HBO, and then now they're going to make their own TVs when the reality is they're already in, over 1/3 of TVs sold in the United States, and those relationships, I think if they focused on the tech, could continue to grow. And, they've also got their toes dipping into this smart home segment, which, if you think about it, is a security camera for your home, and they kind of compete with Ring and Google Nest and all of those. So it just seems like this company feels desperate to find its next leg up instead of focusing on what it is truly great at, and that is the platform, that is the ad tech that they can deliver. And so at this point, we're not sure where Roku goes next. It's always kind of the next thing. But what we are sure of is that they're starting to lose the consumer in some way to exactly what we had hoped would not happen as followers of Roku, and that is everybody talks about, but what about Amazon? But what about Apple? The big guys, the big monsters in the room, and for Roku, it looks like it's coming true. We're seeing Apple TV demand growth on the Amazon Fire side. A small pullback, but nothing like we're seeing in Roku. And I think it's just, an absolute condemnation of the way that Roku has handled the last couple of years, spreading themselves so thin that they forgot exactly what kind of company they were.
Andy, this is a best of times, worst of times story here for Roku. As you know, $490 during the pandemic, down to $38. Now, some of that's justified. It was the valuations were insane when it was up there, but now the valuations are actually on the low side in this number. But Andy, I want to touch on what you were talking about here with making their own TVs. I traded GE, as you know, for 21 years standing in that pit, so I know everything Jack Welch said for 21 years. One of his theories was, make your back office someone else's front office, which means if someone's making TVs really well, why compete with them? Let them do that and then buy the TVs. Why are they trying to get into the hardware business when this company seems to want to be a streamer, Andy?
Yeah, it does. And I think the big question is, why are they getting into home security system or video? Why are they getting into producing TVs? I think that leads you to the next question is, does the executive team not have faith in the growth potential of their core competency, which is even more concerning than the things that they're doing on the peripheral. So I think the natural answer to that question is that the company does not believe that its core platform technology is enough to justify the growth goals that they have. And so they're kind of flailing out there trying to find the next big thing to own a vertical, which is really difficult to own. And I don't know, if you guys have been into a Target or a Best Buy lately, but these TVs are really cheap. They can't be making much money on these.
Right.
You can get a 70-inch TV, I think, for $500 or $600 now that hangs on your wall. I'm not sure where they think the big margins are going to be in producing these pieces of glass that hang on your wall. To me, it's all about what's coming through the pipe, and Roku is best of business in figuring that out for you and enabling that. Stick in that lane, you know, be the one partner everybody has to have, I think would be the better solution, but not the route they're going.
Yeah, and Andy, you know, on that note, creating their own TVs, while it might take away, you know, maybe the access that they have to the consumer moving forward, but at the same time, the OEMs that they had partnered with, doesn't this create some friction for them and some possible headwinds if you look at this? But at the same time, the data says that they're still growing, and this is supposed to be an aggregator. This is what I always thought. It's always an aggregator at this point, and it should be. It's the new cable, right? Everybody wanted to cut the cord, and Roku was one of the first ways to actually aggregate all these, you know, streaming services that we have. Is that what they should stick to, or is your data reflective of that at all?
Yeah, I think so. You know, I think there's some desperation at Roku probably because ad spend is falling, and they had bet a lot, you know, of their company on being able to deliver ads. But I think that comes back, and if you could just become the default aggregator, become the default ad server for people and for companies and for your partners, I think long term that's probably the better play than going out and competing with the very people that you rely on, whether it's on the content side or the equipment and hardware side. You know, I think Roku would be better served knowing their role and becoming and staying very, very good at it, because this is an amazing company that started, you know, not that long ago from nothing. So to even be where they are today is unbelievable accomplishment. I just think they may have gotten caught up in Wall Street's growth expectations a little too much and are flailing as a result.
Yeah, and you know, they don't have earnings for a while, but we're on multi-year lows on this stock going into this. If you guys did have an earnings score on this, what would it look like?
Pretty bearish, negative 54, you know, which is significantly bearish in our world. You know, we think that the risk remains to the downside for the stock even after the massive sell-off that Kevin alluded to.
All right, great stuff as always. Great data as always. Andy, appreciate it. Happy New Year. Thanks for being on today.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down the data. Whew.